Welcome back, everyone. I wanted to give you a top five this week. Just some important things that are happening. So, I'm going to give you guys an update. We're going to talk about big tech earnings. We're going to talk about the Federal Reserve, crypto, AI, and that's going to give us an overall encompass of how the market is moving and why we're seeing some reactions that we're seeing right now. So, starting out with big tech, we saw that what we're still seeing that Microsoft, Nvidia are just absolutely going crazy right now, and this leads to what we talked about in the last episode of semester, really the last couple of episodes, and that is if you are not investing in AI, you're going to get left behind. We're seeing the fruits of labor already pay off for assets like Nvidia, Microsoft, Meta, Mark Zuckerberg, like we've been talking about, he's been relentless in recruiting talent. We're seeing all types of effort to actually run this race and to have this battle to see who's really going to lead the race. And I think that what we're seeing right now is a lot of capital coming in, a lot of institutions, retailers, everybody's taking their position saying, hey, who's going to run this race? Who's going to lead this race? And we want to be exposed to this. So now we're seeing an even more tighter concentration of like what we're typically known as the Big Seven or the Magnificent Seven that kind of lead the market overall and kind of drag the rest of the S&P 500. Now we're seeing like focus inside of the focus, right? So we're seeing like a point one of the point one kind of operate and really just absorb most of the capital that's coming into the market. And we've seen a lot of reports, people talking about saying, this is leading to a bubble. Only a few companies are actually showing profits and record profits and giving us the false illusion that the economy is okay and that the stock market's okay because it's only a few companies. It's always been like that. It's been that way for quite some time. And it's not like there's other companies that cannot have exposure, but like we can say that Apple can definitely step his game up. We've talked about that. Meta is already in there, Nvidia, Microsoft. The leaders in that sector, or the leaders in the current program. So I guess Amazon can step in there too. Really, the companies that have the capital can certainly branch out and invest in AI, but it's not going to change. You're not going to get a company that, let's say, if you're outside of the seven, let's say company number 498 or whatever, I don't know that particular company, but they're not going to come in and unless they revolutionize and um, create something on their own, they're not going to have the capital to recruit the talent that we're seeing, like Mark Zuckerberg giving people $100 million contracts and stuff to actually recruit people from like ChatGPT to bring them in and to develop and work on AI projects with Meta. Like, if you don't have that kind of capital, then you're going to be a non-contender. This has been the way things have been for quite some time. You've always had the market leaders put up most of the gains, right? The purpose of the S&P 500, and I don't want to touch on this because I know this has been making headlines as far as for us being in a bubble and a crash coming this up in the next few months and stuff like that. It's always been that way. You've always had the market leaders. The market leaders are where your gains are going to come from. The diversification into the other companies, that's going to alleviate your risk. So that way, if these companies, the big companies that are moving and heavily investing in AI, if something were to happen or pivot from AI, I don't believe that's going to happen, but you're going to be exposed to other industries as well. That's the purpose of the S&P 500. It's not necessarily to say that all companies should be growing equally and that you should be seeing gains across the board. No, you're going to have your growers, you're going to have your companies that's going to be more for the stability, and you're going to have your companies that's going to grow at a much slower pace. That's the purpose of diversification, really. So I don't believe that. I believe that we're going to close this year up. The same thing I said next episode. This year we're going to be absolutely fine. We're going to uh, continue this trend. I think that we're going to see new all-time highs across the board. I'm going to segue here into crypto in a moment, but I believe crypto is going to be fine. I think we're going to see new all-time highs with Bitcoin. Same thing with SPY and S&P. I think that we're not done yet. I think we haven't seen the best. Obviously, I believe we're going to have a pullback before then, but overall, I believe that's just noise. People, especially bears, they're always going to say the sky is falling, and eventually they'll get it right and say, I told you so. But as of right now, I believe that we're going to be absolutely fine the things that we're seeing. Wanted to touch on the Federal Reserve because I know some people are expecting us to get rate cuts, and we have this ongoing battle between Trump and Jerome Powell. And he believes that we're going to see some of the effects from tariffs soon. So he's not comfortable cutting rates just yet. Obviously, for those of you who aren't sure what the importance of low rates are, it kind of gives you a balance, right? You raise rates to kind of absorb inflation, which is kind of how we got the higher rates that we have now. And we've obviously gotten rate cuts from the peak of inflation. But um, lowering rates, that makes money cheaper, right? So you kind of raise it to absorb money when there's too much of it floating around, i.e., inflation, and then you can ease off of that and make money. The money rules more loose, or I guess looser, and you can get things cheaper, like mortgage rates, credit card interest, all of those, right? And it incentivizes people to go out into the economy. It makes them more comfortable buying things. It makes the money you do have last a lot longer, so it incentivizes money to begin flowing. That overall helps the economy. People feel better about investing. The economy is growing. It starts the cycle, and it starts really just the engine going so that we can keep propelling upward. Right. That's the first step that we typically take when boosting the economy. They obviously the more aggressive approach is to print money, but typically, I believe we're going to start that right now, especially as long as Jerome Powell is in the seat, because inflation, and he is very slow to adjust. And for the people who are wondering why Jerome Powell is very slow to adjust, I wanted to point out that he was way behind inflation initially, right? I don't want anyone to forget that. For those of you who don't remember, he was the one that was saying that inflation was good, inflation was transitory, everything was fine, there was nothing to worry about. This is all before we had record inflation. So he had to come back in later and be far more aggressive than what he would have been if he'd have been proactive initially to get ahead of inflation, right? And I believe now, because he was so wrong initially and missed the ball with potentially not having to knee jerk the rate so high aggressively, because he was incorrect on his thesis as far as for the inflation. I believe this is playing a part now in his reluctancy to uh, lower rates now, right? He kind of wants to make sure that, hey, we're not going to be in a position where we're in this yo-yo, like let's bring back rates this month and 2 months. Oh, we did a little prematurely. Let's uh let's move rates back up. Things are not looking good, or inflation is spiking. Overall, I believe that we are in a position to get a rate cut this year. I know some people are saying it's unlikely. I think that we'll get one this year, but I think he really wants to test the waters as far as for whether or not these tariffs are going to have an effect overall in the macro. So I think he's waiting on some of that data to come back and to give it some more time, at least initially. I don't believe that. For those of you who have been asking about Jerome Powell, whether or not I believe he'll be replaced, I think he'll serve his term. I doubt that he'll be, especially now. It seems that people are kind of pushing for. It's not just the president. People are pushing for rates to kind of come down. So I do believe that if he doesn't do it this year, he'll reach a level of unpopularity to the point where he won't be reelected, or won't win again or be appointed again. But I do believe that he'll serve his initial term, so he may just be in a position where his unpopular uh, sentiment has reached a point where it's better to go ahead and transition into someone else, right? Because I know you guys remember Helicopter Ben, when he was, throwing money around and making money rain out of the sky, out of thin air. And we were having all these amazing years because of the money was flowing in. And everybody was like, oh my God, this is a great time. This is the best Fed chairman ever. Well, you kind of have the opposite effect. When you're not lowering rates fast enough, you're going to have people kind of calling for your head. So we'll see how this goes. I do believe that we'll get one, obviously before the end of the year, but again, we'll see. This is something that's very delicate going forward, and we'll get a chance to see if he's right or wrong again on these tariffs. So that's something we'll keep an eye on, and I'll report back here with you guys. So getting into Bitcoin, we have been hovering around, I'll say maybe like 110 to 120 for the last week. Obviously, breaking above that mid 20 range is going to be great for chugging along and going forward to much higher highs. I believe we're going to get there, obviously. But when you have these runs, one thing I like to do in some of my charting videos is point out um, I use the analogy saying that if you are running and you're running at a high speed and you're able to break previous records or previous personal best and you get to certain plateaus, it's okay for the pace to slow down, right? That doesn't necessarily mean that you're going to quit or collapse to the ground or crumble, but it's okay to slow the pace and kind of regroup yourself before you get that burst of energy, that second wind, and you continue on chugging forward. And I use that analogy because I believe this is a great segue to how stocks and crypto prices work. When you have people that have purchased at much lower prices and assets come in, fear starts coming in. As you hit those new all-time highs, people start taking profits, people start cycling. There's a lot going on at those prices, especially if you consistently hit all-time highs back to back to back to back. So overall, we're looking for that mid to 120 range, but I don't believe this is anything that concern us as far as for saying that we peaked this year and that overall crypto is not going to continue to push forward and uh, really just kind of set the tone here because we have some of the macros that's happening with institutions buying in, right? We see this across the board, ETFs popping up like every day, wanting exposure to crypto. The gains are there, right? It's too attractive to be ignored right now. So this is one of the things where I'm saying that I don't believe that we're going to get those 90% sell-offs and those crypto winters anymore. The gains are too attractive and people are locking in. Everybody's wanting it. These big institutions we saw back a few years ago, JP Morgan, BlackRock, all filing for trademarks for ETF names and wallets and all these kind of. We knew this was coming, right? We've been talking about this for the last few years, and we're here now. People are taking positions and buying into these assets. So these steep price swings that we've seen and that fear there, I believe after this particular cycle here, I believe that it's kind of going to be weaned out because I think a lot of people that because they've been in crypto for the last few cycles, they're used to those price swings. So you still have a little bit of panic selling in there, but I believe that we're going to transition, especially when you have something that's finite like Bitcoin. You're going to see a more consistent price action there, especially when you have so many rich and institutional investors coming in. So overall, again, with the Bitcoin prices, I believe that we're going to close higher this year. I don't believe we peaked for this year. I gave my peak prices that I believe that, or at least some target price. I won't say peak prices. Think variables that can still happen here as we get through Q3 and Q4, but not calling for anything less than 150 on Bitcoin by year's end, even higher going into Q1 of next year. But I believe we still have room to go, even with a pullback from where we are right now. So further cool down from where we are now here in the stock market, not the end of the world. Again, if we've had some terrific runs, all-time highs across the board, crypto and the stock market, we can tolerate a pullback. Everybody calm down, and then we can continue on this pace here. I believe that we're going to see those all-time highs here, some new all-time highs here going forward, right? Uh, so we're talking about stocks and rotations here. So I believe that this has been a topic here saying that are we seeing a rotation from stocks into AI or crypto? I don't believe that. I believe that we're going to continue to see stocks appreciate. I do believe that we're going to see stocks that are invested in AI appreciate at a greater rate for sure. But I believe a lot of the capital is going to fall out of stagnant investments now. So, like things like your CDs, s- things like that kind of give you that fixed rate of return. I believe we're going to see a lot of rotation out of that, right? So that's one of the things that we were talking about. I want to say maybe 2020, 2021, for those of you who've been around for a while. We're talking about crypto taking the place of like the S&P 500, or not necessarily taking the place, I don't want to use that analogy, but creating their own version of the S&P 500. And we were talking about having like a crypto version and going out and having something similar. but giving better performance, right? And that I believe is going to cause a rotation out of fixed rate returns, right? I believe that it's going to increasingly become unattractive over the course of time as these gains come up and you start mixing in stocks that can obviously, do stock buyback, stock splits and all that. But if you have something with like a finite amount, let's say everybody's chasing, 20 million coins, basically, the value just goes up astronomically. Even when you have large amounts of capital going in there, those returns are not, it's going to be hard for me to sell you, 10% return and poo poo coin is done 1400%, right? So you have to you're going to see that rotation in there just for portfolio sake, and that leads to what we just talked about with the institutions buying in and being aggressive and starting these ETFs. They want that exposure, right? So that you can expect these things coming and going forward with these assets to see like that rotation come out of some of those more stagnant investments and into the new field, which is obviously AI. So those companies and assets that are either exposed to AI or are in the space, right? I believe that's going to be the rotation, not from stocks to AI. I don't believe that's the rotation. I think there is one, but I think they missed it. So overall, that is my top five here. I want to give you guys kind of like a midweek update. Let me know your thoughts. Please feel free to share. I will touch base with you guys again toward the end of the week. We will cover some more of the topics here, especially once we get some more of the earnings reports over the next week or so. Again, so far everyone's been killing it with earnings, so we've been able to see a lot growth here across the market. And I believe that's kind of going to be the tone going forward. And if Jerome Powell does give a rate cut, we're going to the growth we've seen now will be nothing, right? Because now we have the AI sectors and we see a cheaper money become available, right? We see comfort in the real estate market and comfort taking on debt. The growth is only going to get more aggressive. So that's going to be something there that we kind of would have to factor in at that particular time, right? We know obviously rates will get cut at some point, but the question is when, right? But if that does happen, especially 4 years in, then the growth that we're going to see then is obviously we're going to put up some incredible numbers going into Q4, certainly by Q1 of next year. So again, I know some of you watch this in video format. Please feel free to download the podcast on your favorite app. This is available on Anomalous Investor. You can search for it. It'll be a picture of me with a stock chart behind it. Please consider downloading and listening to the audio as well. I appreciate all of you, and I will see you guys in the next one.